Welcome to ZICA Academy YouTube channel. In this lecture, I want to examine deseasonalized data or seasonally adjusted sales in time series analysis. If you are coming across my lecture for the first time, please like the video and also share it with others. If you are a returning subscriber, I say thank you for being part of this channel. So, what do we mean by deseasonalized data? Deseasonalized data is the process of separating out the trend and seasonal variation. Deseasonalized data. Data or seasonally adjusted sales is the process of separating out. The process of separating out the trend and the seasonal variation. The process of separating out the trend and seasonal variation is said to be the seasonally adjusted sales or deseasonalized data. In my earlier videos, I've examined the models of time series. I've considered two separate models. Number one model is additive model. Additive model, which says actual sales or time series data equal to trend plus seasonal variation plus cyclical variation plus random variation. I've told you of these four variables, the first two are the most important. Therefore, actual sales will be trend, which is letter T, plus seasonal variation. Trend plus seasonal variation will give us the actual sales. So, if you are to calculate the deseasonalized sales or deseasonalized data, or to calculate the seasonally adjusted sales, so what you need to calculate is the trend. Just make your trend the subject of the formula. So you have the trend equals to actual sales or actual time series data minus, you bring this one with this, minus seasonal variation. So this will be the model if you are using the additive model. I've told you that additive model is used where seasonal variation are in form of plus or minus, where the seasonal variation are in plus or minus, additive model is most appropriate. But where seasonal variation is in percentage, you use multiplicative model. That means seasonal variation is in percentage. Or decimal, such as 0.2, 0.8, and so on. Multiplicative model will be used where seasonal variation are in decimal. So, now multiplicative model, actual sales using multiplicative model will be equals to trend times seasonal variation. So, to estimate the deseasonalized sales, which is the trend, you make your trend the subject of the formula. You have actual sales over seasonal variation. That will give you the trend. These are the two models in time series. This question is obtained from ICAN November 2021 Performance Management question number 4. You work as the assistant to the management accountant for Herring Limited, a medium-sized manufacturing company. one of its products, product P, has been very successful in recent years, showing a steadily increasing trend in sales volumes. Sales volumes for the 4 quarters of last year were as follows: quarter 1, quarter 2, quarter 3, and quarter 4. Actual sales volume in units: 420,000, 450,000, 475,000, 475,000 for quarter 4. A new assistant has recently joined the marketing department, and she has asked you for help in understanding the terminology which is used in preparing sales forecast and analyzing sales trends. She said, "My main problem is that I do not see why my boss is so enthusiastic about the growth in product P's sales volume. It looks to me as though the rate of growth is really slowing down and has actually stopped in quarter 4. I am told that I should be looking at the deseasonalized or seasonally adjusted sales data, but I do not understand what it means by this." You have found that product P sales are subject to the following seasonal variation. We have quarter 1, quarter 2, quarter 3, and quarter 4. Seasonally variation in units: quarter 1 plus 25,000, quarter 2 plus 15,000, quarter 3 is 0, quarter 4 minus 40,000. Required: A. 1. Adjust the seasonal variations to calculate the seasonalized or seasonally adjusted sales volume, that is the trend figures for each quarter of last year. Quarter 2. Assuming that the trend and seasonal variations will continue, forecast the sales volumes for each of the 4 quarters of next year. B. Explain what is meant by seasonal variations and deseasonalized or seasonally adjusted data. Indicate how they can be useful in analyzing a time series and preparing forecasts. C. State the arguments for and challenges arising from managers participating in setting their budget targets. You are to adjust the seasonal variations to calculate the seasonalized or seasonally adjusted sales volume, that is trend figures. You want to estimate the trend figures for each quarters of last year. Now, that is what is meant by deseasonalized or seasonally adjusted sales volume, that is trend figure. So when you estimate trend figures in the data, that means you have deseasonalized it. Now, I've told you that where seasonal variation is given in plus or minus, additive model is most appropriate. If you have watched my earlier videos, I've explained 2 models used in calculating time series. We have the additive model and multiplicative model. I've told you where seasonal variation are given in either plus or minus, you use additive model. But where the seasonal variation are given in percentage, multiplicative model is most appropriate. Where seasonal variation are given in percentage or a decimal number, so you use multiplicative model. So in this case, you want to estimate trend. I've told you that time series data is equal to T, which stands for trend, plus seasonal variation, that is S, plus cyclical variation, plus random variation. This is using the additive model. But for multiplicative model, time series data equals to T times S times C times R. This is multiplicative model. Of these four variables, the first two are the most important. That is trend and seasonal variation. So, I've told you in this question, additive model is most appropriate because the seasonal variations are given in plus or minus. So, in this case, you want to use the additive model. So, time series data equals to T plus S. If these two are the most important, so you have T plus S. You are to calculate in A1, you are to calculate deseasonalized or seasonally adjusted sales volume. I've told you to deseasonalize, or to estimate the seasonally adjusted sales volume. That means you are expected to calculate trend figures. Now, what is trend? This letter stands for trend, letter T. So let's make T the subject of the formula. So that means this and this will be brought together. This time series data, let us assume it is actual sales equals to trend plus S. So if you make T the subject, T will be equals to actual sales minus S. You are bringing S with this minus S. Remember, T stands for trend, and this is actual sales, which will be provided in the question, minus S stands for seasonal variation. Remember, we have 4 quarters. Now, estimation from figure 1, calculation of deseasonalized sales, deseasonalized sales, or seasonally adjusted sales data. You have 4 quarters. Quarter 4, quarter 3, quarter 2, quarter 1. Sales volumes for the 4 quarters of last year were as follows. You have quarter 1, quarter 2, quarter 3, and quarter 4. The actual sales volume, 420,000 for quarter 1, quarter 2, 450,000, quarter 3 and 4, 475,000 each. Now, they have the actual sales volume. Actual sales volume. Quarter 1, we have 420,000. Quarter 2, 450,000. Quarter 3 and 4, 475,000 each. After sales, having considered the actual sales, the next item is minus seasonal variation. So now, what is our seasonal variation? So you have found that product P sales are subject to the following seasonal variations. You have the seasonal variation plus 25,000, plus 15,000 is 0, and minus 40,000. Now, let's adjust for seasonal variation. This is plus 25,000. Remember, this is minus sign. So, that means if this minus times that plus, it will be minus. That means you are going to subtract this. The second one is plus 15,000. Minus times the plus you have there, it will be minus. The next one is a 0. Doesn't have any effect. either plus or minus. The last one is minus 40,000. This minus sign, actual says minus 40,000. These two minus, this minus and the minus this 40,000 carries in the seasonal variation. The two minus become plus. So that is why we'll be having plus here. That means if it is minus, the minus become plus. If it is plus, the plus become minus. Let's take it that way. Now, let's adjust for that. So we now have seasonally adjusted sales. For 20,000 minus 25,000. That gives us 395,000. Then 450,000 minus 15,000. That gives us 435,000. Then 475,000 plus or minus 0, it will still be 475,000. 475,000 plus 40,000, that gives us 515,000. 515,000. Back to the question. You are to adjust the seasonal variations to calculate the seasonalized or seasonally adjusted sales volume. That is trend figures for each quarter of last year. That is what we have just done. Then Roman figure 2. Assuming that the trend and seasonal variations will continue, you have to forecast the sales volumes for each of the 4 quarters of next year. You want to make a forecast of sales volume for each of the quarters of next year. But before you can forecast the sales volume, you must have estimate your trend. But the trend is not given in this question. The trend equation rather is not given. So what is the basis for establishing our trend? Now, trend in the data. You are not given trend function or trend equation. So now, let's look at the relationship between these seasonally adjusted sales in order to estimate our trend. 435,000 minus 395,000. What is the difference? That is 40,000. That means this is greater than this by 40,000. Then, if you equally have trend, 475,000 minus 435,000. How much is the difference? The difference is still 40,000 as well. So that means this is greater than this by 40,000 as well. Then, if you also have trend, 515,000 minus 475,000. How much is the difference? The difference is still 40,000. That means the trend in the data is 40,000. That is the, let me call this trend relationship. Trend relationship. Now, let's estimate trend for each of the quarters now. Trend. We have quarter 1, quarter 2, quarter 3, quarter 4 of next year. Quarter, the initial sales for the last period is 420,000, given in the question, 450,000, 475,000, 475,000. Now, since trend for the last quarter of last year is 515,000. I remember each quarter is greater than the other by 40,000. 395,000 plus 40,000 will give you 435,000. 435,000 plus 40,000 will give us 475,000. 475,000 plus 40,000 will give you 515,000. That is the trend. Then first quarter of the following year, you have 515,000 plus 40,000 as well. 515,000 plus 40,000, that gives us 555,000. That is the trend. Then the second quarter will be 555,000 plus 40,000. That gives us 595,000. That is the trend. 595,000 plus 40,000. That gives us 635,000. Then 635,000 plus 40,000. That gives us 675,000. These are the trends in the data. Now back to the question. You were told, assuming that the trend and seasonal variations will continue, you have to forecast the sales volume for each of the 4 quarters of next year. You want to forecast the sales volume for each of the first quarter. All you need to do is to adjust for the seasonal variation in the data. I've told you that time series data equals to trend plus seasonal variation using additive model, since these two variables are the most important. So the time series data could be the actual sales you have to estimate. Actual sales, which is equal to trend plus seasonal variation. You have 4 quarters. If you go back to the question, you are told in Roman figure 2, assuming that the trend and seasonal variations will continue, you have to forecast the sales volume for each of the 4 quarters of next year. Now, let's have forecast sales volume for each of the 4 quarters of next year. We have quarter 4, quarter 3, quarter 2, quarter 1. You have trend. The first variable there is trend. So trend. Our estimated trend, we have 555,000, 595,000, 635,000, and 675,000. Now, 555,000, 595,000, then 635,000, then 675,000. Then we said trend plus seasonal variation plus seasonal variation. Remember, this is plus this time around, not minus. What you are calculating is the actual sales, not trend. Now, what is our seasonal variation? Back to the question. Plus 25,000 for quarter 1, plus 15,000 for quarter 2, 0 for quarter 3, minus 40,000. So quarter 1 plus 25,000, quarter 2 plus 15,000, quarter 3 0, quarter 4 minus 40,000. This carry minus. Remember, This is plus. Plus times minus will still be minus, since this carries minus. You are calculating actual sales, not trend this time around. The symbol will not change. So now, let's add. Actual sales. 555,000 plus 25,000. That gives us 580,000. 595,000 plus 15,000. That gives us 610,000. 635,000 plus 0. That will be 635,000. 675,000 minus 40,000. That will be 635,000. This is the actual sales data for each of the quarters of next year. We've done with Roman figure 2. Then B. Explain what is meant by seasonal variation and deseasonalized or seasonally adjusted data. Indicate how they can be useful in analyzing a time series and preparing forecast. All this theory have been explained in my earlier videos. So I will advise you go back to my earlier video for the C and D part of the questions. They are theory. Or go into the ICAN Pathfinder to extract more details about this. I've stopped this video here. Please make sure you drop the love emoji. Also share the video with others. Thanks for watching ZICA.